Credora recently published an independent risk rating for Lido stETH, which received an A+ rating. This is the first asset level rating issued on a liquid staking token at this scale at DeFi. So we're really happy to welcome Bernardo, risk analyst at Credora, to our virtual stage to walk us through the methodology and results.
Thanks a lot, Keen, and thanks a lot for inviting me and for having Credora explain the A+ rating we've assigned to stETH. Among the many assets we've rated already, stETH had to be one, naturally. So we're excited to publicize here a little bit on the reasoning behind why the A+ and how does it translate to a 0.10% probability of default, among the lowest we've researched on all the assets we've done. So just a quick overview on the methodology. I have 10 minutes or so and maybe a couple more for questions, so try to be quick here. We rate quite a few categories. stETH naturally is a derivative. We jump to the anchor PD, where for stETH specifically, we accounted for smart contract risk and asset reserve quality, custody, and active trading strategy do not concern stETH in this case. Then a few modifiers, what I'll get into, and then we arrive at the final PD and final letter rating by computing the anchor PD and modifiers together. But PD means probability of default, and per Credora's definition, that probability means token holders being enabled to redeem their assets. So the protocol mechanics around the redemption fail in some sense, or the reserve of the protocol becomes insolvent. So default means one or both of these cases happening. So that's the PD. To break down the anchor, which we start the analysis by, and that carries the most risk, so the most impact on the rating, we start with a smart contract risk, 15 basis points. The justification is below. So exceptional number of independent audits, by far the largest we've seen in this quantity-wise and number of security reviews. Formal verification has been processed and reviewed by Credora last year. We accounted for the issues being fixed before deployment that the audit firms detected. $2 million bounty active, and more than 5 years of operations since December 2020. 0.15%. Why? This is modeled so the range of the PD for smart contract risk goes from 0.15% to 1.20%. So obviously stETH scores on the lower bound, and this is modeled against smart contract exploits, historical smart contract exploits, and they vary by this metric. Naturally, reserve quality really strong. It's just ETH, and ETH being the native blockchain token, really unlikely to default. So it's just pretty much a symbolic PD here, and it's backed one-to-one, of course. Then we apply a few modifiers on top of the anchor PD. No recent incident in the last 6 months. Just a minor slashing event on March this year, although it was minor again, and resulted in zero user impact. So we didn't register that as an incident exactly. Obviously, reserves transparently can be checked on chain. Price stability quite strong, volatility quite low relatively. No deviation above 1% over the last year. There has been a deviation July 2025, but that was 0.3%. So it doesn't quite cut our deviation threshold above 1%. So we account for that as very safe in the last year. Obviously, pretty strong dominant market cap within the LST category. These numbers are as of the when we reported the letter rating and we launched the report, so sometime last month. Governance decentralized and strong as well. Really quite a high or quite a long time lock, which is good. Dual governance has been introduced for stETH holders to have the power to veto DAO decisions. There's a 72-hour voting period, and stETH has scored positively on all the 5 emergency response metrics, being that the playbook, when an incident happens, whether there's any kind of insurance fund, which that mechanism exists, there's privilege scope and constraints, on and on. So we arrive at the viewer may be wondering, the ranges that I present here may be a little counterintuitive, but they sort of try to lay out the metrics that are most impactful toward the probability of default again. So those are, in this case, the recent incident, transparency of reserves, and governance metrics. The other two are more market related and do not quite impact as much, don't have that much criticality compared to the others, and usually also happen so they are impacted as a second order effect from the epicenter of the risk itself. So we arrive at the final notch adjustments and the final modifier, which leads us to 0.10% or A+ rating per Credora definition. So it rates a little bit and underscores some minor considerations. So pretty strong security profile again, on-chain, reported on-chain, and verifiable. Market dominance really strong, and DAO also quite strong. If I had to poke holes a little bit, and with regards to some considerations, one could argue still a little low on-chain participation, although so there's this minimum of 5% quorum, which often clears with a narrow margin. Then there are these sort of two modes of validator sets. There's the permissioned, which holds quite a big chunk, 92% of stETH, and the permissionless, which is capped at 5. Although the permissioned itself is not that centralized, because I believe there are 30 plus operators within it, so that's a positive sign, even though permissionless still at 5. Although I don't know the status right now of the proposal, but there was some plans to expand to a 10% cap. So that's a positive signal. So then legal and regulatory risk seems to be getting more important. This wasn't accounted for on the rating because a little hard to know how to translate this very qualitative metric into a quantitative one, and know how to assess, how to make that impact the final rating. So it's just so this SEC case referenced Lido as referenced the Lido token and alleged it to be sold as an unregistered security. But that was later dismissed because of, I believe, maybe lack of substance, or just lack of a regulatory framework and standing in that sense. So I hope I did well on time here, and essentially the final verdict by Credora was to rate stETH as an A+, and have a probability default around the 10% mark. So which kind of scores it among the highest rated. It's the highest rated derivative, I believe. So yes, thanks so much. Hope I have still a couple minutes for questions, if that's possible.
Super, Bernardo, thank you so much. That was a great talk and great presentation. It's really nice to see that stETH is Credora's first public asset level rating. Now what we can do is we actually move on to the Q&A session. So just a quick reminder to everyone, you can send in your questions on the platform where you're watching this. So again, Twitter, LinkedIn, or YouTube. Our first question I think I have is, how does stETH's A+ compare to other LSTs you've rated?
Yes, so as I said, the derivatives is the highest rated, and also the LSTs is the highest rated. Mostly because, so as you've seen in the presentation, the smart contract risk is one of the biggest drivers of the rating, and stETH is just really robust. So this the amount of audits, the formula verification being done, the longevity. So this scores, without naming others, this scores really on top of the herd here. Others are not as robust in the smart contract risk as stETH is. So that's the also governance really strong. But I'd say the smart contract risk.
Super, that's fantastic. And another question I have is, based on your analysis, do you believe stETH will be able to efficiently navigate the recent DeFi exploits we've been witnessing?
So try to I'm gonna try to be to provide you just an overview because this could take some time. But essentially, to talk about the latest 3 or so, I guess. So USR is essentially trying to not step over important details, but USR essentially was exploited due to an EOA with uncapped minting permissions. stETH is minted one-to-one algorithmically, so there's no uniparty minting manually in this case, or with the overwhelming powers. Then Drift has seen some. So they did have a multi-sig, but that was sort of socially engineered to just be one person just hacking the protocol, and a major point of concern was no time lock. As I said, stETH is maybe the longest time lock I've seen, and that's just a minimum of 5 days, I think, with the opposition within the DAO that can extend to 45. So that's remarkable. Then the latest RSETH, as you talked about in the beginning, it was essentially just a bridge setup risk without trying to blame which one. That's an ongoing battle without trying to blame which one the fault will lay there. stETH is just native to Ethereum. So the bridged representation of stETH is the wrap stake ETH. So that would be the one that could be impacted by this sort of thing. But stETH is on the clear. So I think, summarizing, I think theoretically, as I see it, likely stETH would be clear of all these exploits. Although they're getting creative, so it's a little hard to predict what's going to happen in terms of social engineering and these things that are hard to quantify on my side. But my job at Credora is to be as least strong as I can and try to improve a little bit day by day. So I'll say that.
Super. And Bernardo, maybe before I let you go, what is the best way for people to get in touch with you?
So with me, you can at Ben VICC at Telegram, then at Credora Network on Twitter. And check we are launching some cool features soon. Not going to announce more. So yeah, and we'll keep we'll try to keep DeFi. Just try to surface risks is more important than ever, and we are the leading ratings provider. And hope you all follow us, make DeFi more risk aware. Know your risk.
Super, Bernardo. Thank you so much again.
Thank you.